Welcome to our channel. Today we will explore the fascinating world of crypto assets. Do you know what crypto assets are and how they work? Stay with us to discover everything about this current and important topic. Crypto assets are digital assets that use cryptography to ensure secure transactions and control the creation of new units. They operate in a decentralized manner, usually on a blockchain network. Think of crypto assets as digital money. Just like you use physical money to buy things, you can use crypto assets for online transactions. The difference is that instead of coins and notes, you have digital codes. Cryptography is a technique that transforms information into a code to prevent unauthorized people from accessing these data. In crypto assets, cryptography is used to protect transactions and control the creation of new units, ensuring that only legitimate owners can spend their crypto assets. For example, when you make an online purchase with a crypto asset, your transaction is encrypted so that only the recipient can decrypt it and receive the payment. This makes transactions more secure than with traditional methods. The first crypto asset, Bitcoin, was created in 2009 by a person or group of people under the pseudonym Satoshi Nakamoto. Since then, thousands of crypto assets have emerged, each with its unique characteristics and purposes. Imagine Bitcoin as digital gold. Just like gold, it has value because people believe in its value, and it is limited in quantity. Before Bitcoin, there were several attempts to create digital currencies, but they all failed due to issues like fraud and double spending the same money twice. Bitcoin solved these problems using blockchain technology, which records all transactions in a public and immutable ledger. In the early years, Bitcoin was mainly used by technology enthusiasts and people interested in new forms of money. However, as its value started to increase, it attracted the attention of investors and the general public. An important milestone in Bitcoin's history was the first purchase of a physical good with the currency. On May 22, 2010, a programmer named Laszlo Hanyecz bought 2 pizzas for 10,000 Bitcoins. This day became known as Bitcoin Pizza Day. Since then, Bitcoin has grown exponentially in value and adoption. Today, it is accepted by many companies and can be used to buy a variety of products and services. Additionally, Bitcoin has inspired the creation of thousands of other cryptocurrencies, each with its own characteristics and uses. Crypto assets operate on blockchain networks, which are distributed and immutable ledgers. Each transaction is verified by a network of computers, ensuring security and transparency. Think of the blockchain as a digital ledger. Each page of the ledger is a block, and each block contains several transactions. Once a page is filled, it is added to the ledger, and the entire ledger is copied to all the computers in the network. This ensures that no one can alter a page without everyone noticing. The blockchain is decentralized, meaning there is no central authority controlling it. Instead, it is maintained by a network of computers, called nodes, that work together to verify and record transactions. Every time a new transaction is made, it is sent to the network and verified by these nodes. If most nodes agree that the transaction is valid, it is added to the blockchain. Imagine you want to send 1 Bitcoin to a friend. First, you create a transaction and send it to the network. The network nodes verify if you really have 1 Bitcoin to send and if the transaction is valid. If everything is correct, the transaction is added to a new block, which is then attached to the blockchain. Now, everyone in the network can see that you sent 1 Bitcoin to your friend. Mining is the process by which new transactions are added to the blockchain and new crypto assets are created. Miners use powerful computers to solve complex mathematical problems. The first miner to solve the problem adds the block to the blockchain and receives a reward in crypto-assets. Think of mining as a lottery. Each miner is competing to solve the problem, and the first to find the solution wins the reward. This incentivizes miners to keep the network secure and running. Among the main advantages of crypto assets are decentralization, security, transparency, and the possibility of fast and low-cost transactions. Decentralization means that there is no central authority, like a bank or government, controlling the crypto assets. This gives users more control over their money and reduces the risk of censorship or manipulation. Security is guaranteed by cryptography and the decentralized nature of the blockchain. Since all transactions are verified by multiple nodes, it is extremely difficult for a hacker to alter or forge a transaction. Transparency is another important advantage. All transactions are recorded on the blockchain and can be verified by anyone. This helps prevent fraud and increase user trust. Transactions with crypto assets can be made quickly and with low costs, especially compared to international bank transfers, which can take days and involve high fees. For example, sending money to another country can be expensive and time-consuming with traditional methods. With crypto assets, you can send money almost instantly and with much lower fees. Crypto assets also offer global access. Anyone with an internet connection can use crypto assets, regardless of where they are in the world. This is especially important in countries with unstable banking systems or financial restrictions. However, crypto assets also present disadvantages, such as price volatility, uncertain regulation, and the risk of fraud and cyber attacks. Price volatility is one of the main disadvantages. The prices of crypto assets can rise or fall quickly, which can be risky for investors. For example, the price of Bitcoin has ranged from less than $1,000 to over $60,000 in a few years. The regulation of crypto assets is still developing in many countries. This means that laws can change and affect how crypto assets are used and traded. In some places, crypto assets are completely banned, while in others they are accepted and regulated. Despite the security of the blockchain, crypto assets can still be targets of fraud and cyber attacks. Hackers can steal crypto assets from exchanges, trading platforms, or digital wallets, and frauds such as pyramid schemes are also common. Crypto assets can be used for various purposes, such as investments, online payments, international remittances, and even smart contracts. Smart contracts are programs that automatically execute the terms of a contract when certain conditions are met. Many people buy crypto assets as an investment, hoping that their value will increase over time. This is similar to buying shares of a company, hoping that the stock price will rise. Crypto assets can be used to make online payments quickly and securely. This is especially useful for people living in countries with unstable banking systems or for international transactions. Sending money to another country can be expensive and time-consuming with traditional methods. Crypto assets allow people to send money anywhere in the world almost instantly and with much lower fees. Smart contracts are one of the most innovative applications of crypto assets. They allow contracts to be executed automatically when certain conditions are met, eliminating the need for intermediaries and reducing the risk of disputes. For example, you can program a smart contract to release a payment automatically when a product is delivered. This eliminates the need for intermediaries and reduces the risk of disputes. The future of crypto assets is promising. With the advancement of blockchain technology, new uses and applications are constantly being developed, from creating new forms of financing to improving the efficiency of financial systems. Crypto assets have the potential to transform the global economy. Think of crypto assets as the internet in the 90s. Just as the internet revolutionized communication and commerce, crypto assets have the potential to revolutionize the financial system. One of the most promising innovations is decentralized finance (DeFi), which uses smart contracts to create financial services without intermediaries. This can include loans, insurance, and even decentralized exchanges. Additionally, crypto assets can have a significant social impact, especially in developing countries. They can provide access to financial services for people who do not have access to traditional banks, helping to reduce poverty and inequality. We hope you enjoyed this introduction to crypto assets. Don't forget to subscribe to the channel and turn on notifications so you don't miss our next videos.